Welcome to Educare. Question is Norma. Norma, who had been in business as a confectioner since 1st May 2018, disposed of her business and retired on 31st May 2022. So, here we have been given the starting date as well as ending date. This is the first thing you need to identify, that the starting date and ending date both are given. She does not intend to start any other business but will be employed part-time from 1st June 2022 on an annual salary of 11,400. So, after doing business, after disposing of business, she has started as an employee and earning an annual salary of 11,400 from 1st June 2022. Her trading profit losses are adjusted for taxation where the scenario relates to two requirements. First, her trading profit losses is adjusted for taxation where period ended 31st December 2018 profit of 21,000 and so on. For 31st December 19 it is 27, 16,900, 9,835 of profit, but in the period ended 31st May 2022 she suffered a loss of 11,000. Norma has received bank interest of 3,250 each year since April 2018. In addition, she realized a taxable gain after the annual exempt amount, means you don't have to deduct the annual exempt amount of 12,300, and this gain is of 38,000 in June 2021. The taxable gain does not qualify for business asset disposal relief. So, the taxable gain does not qualify for the business asset disposal relief, and it is not in relation to the residential property. So, they have clearly mentioned what rate should be applied, and as you know that there are difference in rates for normal property gain and residential property gain. The requirement is calculate Norma's taxable income and gain for each tax year that she was in business before any relief for the loss arising in the period ending 31st May 2022. So, first part is little simple. For this we have to draw some columns. So, first part is little simple, a couple of workings are required here. First we have to record the profit for the year ended 31st December 2018. Remember, the year that ended on 31st December 18 is a tax year that is said to be 1819. Also, the business starting date is mentioned to us as 1st May 2018. It means we have to apply the opening year rule and find out what amount of profit or loss to be recorded in the first year. So, in the first year, that starts from the 1st May 18 and ends on 5th April 19. This year is known to be 1819 tax year, right? As Norma's accounting year ended date is different, this is mentioned to us as 31st December in the question. This is 31st December 2018. In the first tax year, we have to find out the profit from the date of commencement of business, that is 1st May 18, to the date of following tax year ending date, that is 5th April 19. So, if we are considering that from 1st May 18 to 31st December 18, this is a profit mentioned as 21,000. Now, we have to find what is the profit for this 3 months period that starts from 1st January and ends on 5th April 19. So, we have to find the profit for this 3 months period. For this, we are considering the next year profit because in accordance with the accounting year, it lies in the next year where we have a profit from 1st January 19 to 31st December 19, a profit of 27,000 has been earned. So, we have to identify if 27,000 is a profit for 12 months, what is the profit for first 3 months. So, it will be 27,000 multiplied by 3 divided by 12. Remember, in accordance with rules, The identification of first tax year is that we have to consider the profit to be included in the first tax year from the date of commencement of business to the date when following tax year ends. So, this is the period from 1st May 18 to 5th April 19. From 1st May 18 to 31st December 18, the profit earned by the business is 21,000, but we have to add further 3 months profit, and the further 3 months of tax year lies in the next accounting year. So, we have considered the profit earned in the next accounting period, that is 27,000 from 1st January 19 to 31st December 19, that is given here. So, out of this we have included 3 months profit. So, this will be 27,000 multiplied by 3 divided by 12, and this will be 6,750. So, the total profit that is to be assessed in the first tax year, it is 27,750. Then we have to consider for the tax year 1920, current year base should be used, and the profit to be recorded is 27,000 in the second year. In 2021, again current year base is used, and the profit is to be recorded as 16,900. In the next year 21-22, the profit is to be recorded as 9,835, right. So, this is the profit. Last year calculation will done later on. So, from start we have to consider here 27,650 or 750. This is 750. 27,750 is the trading income for the first year 18-19. Then it is 27,000. Then it is 16,900. And then it is 9,835, right. In the year 22-23, they have suffered a loss of 11,000. This is the loss of 11,000. So, for loss we don't have to record anything, and remember that you have to record 0 instead. In the first 4 years there is no employment income, and in the final year what amount he has earned from her employment, from 1st June 2022 on an annual salary of 11,400. So, as she start employment and her annual salary is 11,400, but we have to record in the tax year 22-23 salary up to 5th April 23, as our tax year ends on 5th April 23. So, it is a period of June, July, August, September, October, November, December, January, February, March, 10 months period. So, if 11,400 is a salary of 12 months, then what is the salary to be recorded for 10 months period? So, it is 9,500. So, employment income to be recorded here is 9,500. In all this year, she has received an interest of 3,250. So, what is her total income in the first year? This will be 30,000, 31,000. In the second year, it is 30,250. Third year, it is 20,150. Fourth year, it is 9,835, 13,250. 9,835 plus 3,250, this is 13,085. 13,085, and then it is 12,750. This is the total income of this person, taxable income from saving and non-saving income. Remember that for the individual, as the on the capital gain tax different rates are applied. So, that is why capital gain is not to be included in this. So, it is said to be taxable income on which we have to apply the rates of 20, 40 and 45%. So, this is taxable income. And so, after deducting personal allowance is 12,570 in all these years. In fact, it is total income, and after deducting personal allowance it will be taxable income. But remember that capital gain is not to be included in this, because on capital gain for individual different rates are to be applicable. So, this is 18,430, this is 30,250 minus 30,250 minus 12,570, this is 17,680, then 20,150 minus 12,570, so this is 7,580, 13,085 430 plus 50 85, it is 515, and then it is 130 and 50 180. So, this is our taxable income, and if we have to include the capital gain is earned in which year? 38,000 in June 21. So, this is the year 21-22 in which we have earned the capital gain. So, that is 38,000. So, this is the first requirement of the question: calculate Norma's taxable income and gains for each tax year that she was in business before any relief for the loss arising in the period ended 31st May 2022. So, this is first part. So, second part is explain the option available to Norma to utilize the loss and explain the effect on her tax liability of the loss relief claims identified. Assume that the tax rules, rates and allowance for the tax year 22-23 apply throughout. So, first we have to identify what is the loss in the final year of trade, that is 11,000 of loss sustained in the final year, 11,000 of loss sustained in the final year plus overlap of profit, and overlap of profit is this 6,750 that is recorded in the tax year 18-19 as well as in 19-20. So, this 6,750 of overlap profit will increase the loss to 17,750. This is the loss to be set off, right? 11,000 loss in the final year of trade plus 6,750 of overlap profit. Now, we have different options available to set off loss against total income. Set off losses against total income of current year. First option is to set off loss against the total income of current year. Second option, previous year. Third option, first to set off loss against current year and then set off loss against previous year total income, right? And the fourth option is first to set off loss against total income of previous year and then total income of current year. These are the four options available to Norma. So, first, if she is exercising the first option, means setting off loss against the current year, then in that case the total loss is 17,750, right? Total loss is 17,750. So, if she set off loss against the total income of current year's total income is 12,750. This is 12,750. So, if 12,750 loss is total, 17,750 1750. So out of 17,750, 12,750 of loss is set off against the total income of current year. So our tax liability in the year 22-23 will be 0, right, as we are setting off 12,750 of loss against the current year total income. So it will make the total income to 0. Remaining 5,000 loss, because total loss is 17,750, out of this 12,750 has been set off against the current year total income. Remaining 5,000 of total loss could be set off against the previous year income, right? First current year and then previous year income. Because remember that in the loss cannot be carry forward, because carry forward option is available when the loss is to be set off against the future year trading profit. So there is no trading profit after ceasing the business. There is no trading profit after ceasing the business. So option available to us that first to set off the loss against the current year total income and then to set off loss against the previous year income. So if this 5,000 of loss is to be set off against the previous year total income, the previous year total income is given to you 13,085. So it will be reduced, but part of personal allowance will be wasted. Part of personal allowance will be wasted, because if 13,085 of total income is reduced by 5,000, it becomes 8,085. So if the total income is 8,085, it means we are not having a full benefit of personal allowance. So second option is for us to set off loss first against previous income and then against current year income. So in the previous year income is 13,000, total income is 13,085. So out of 17,750 loss, 13,085 of loss will be set off against the previous year income, and remaining loss would be set off 4,665, I think so. This is 4,665. This loss is to be set off against the total income of current year. Again, we have a current year income of 12,750. When it is reduced by 4,665, when it is reduced by 4,665, the amount income available to us is 8,085. Again our personal allowance will be wasted, right? Now the third option is that first to set off losses against the total income of previous year and then to set off losses against the chargeable gain of previous year, right? So in this way you can minimize your tax liability. A little complicated to understand. First, think that if you are not using your chargeable gain of the loss option, then total income, total taxable income of 515 will be taxed at 20%, right? Your total income, taxable income of 515 will be taxable at 20%, and remaining portion of basic rate band, unused basic rate band, will be 37,185. So this 37,185 of chargeable gain will be taxed at basic rate. Not whole the 38,000 chargeable gain will be taxed at basic rate, because we are utilizing 515 of our saving and non-saving income to be taxed at basic rate. So remaining unused basic rate band would be, in case of setting off losses, first against total income of previous year and then chargeable gain. So if you are setting off your losses against total income of previous year, the total income of previous years reduces to nil, and remaining chargeable gain to be taxed will be at basic rate. So it is too difficult to understand. First, you think that if you are not setting off your losses against chargeable gain, what is the tax liability to be calculated? In the tax year 21-22, you have to tax 515 of your non-saving and saving income at the rate of 20%, right? So this will be, I think so, 103. Next is out of 37,700 of basic rate band, 515 of basic rate band has been utilized. So remaining basic rate band is 37,185. So chargeable gain of this 37,185 will be taxed at 10%, right? So this is 3,719. Then remaining chargeable gain, because we have a chargeable gain of total 38,000. So remaining chargeable gain of 815 will be taxed at 20%. So this is the 815, 163 is the tax liability in case you are not setting off loss against the total income of 21-22, right? So if you are setting off loss against the total income of 21-22, then there is no saving income, right? And 37,700, and after that 38,000, or in detail you have to consider the total loss is 17,750. First you set off against the total income of previous year. Remaining loss would be 4,665. If this loss of 4,665 is to be set off against the chargeable gain of 38,000, the chargeable gain would reduce to 33,335, right? So now on this chargeable gain, after the setting off of losses, this chargeable gain will be taxed at 10% on the basic rate. So this will be 3,334. So this is the tax to be paid in case loss is to be set off against the previous year total income and then against the chargeable gain. So our saving would be this, means this is the total amount of tax we have to pay. So now as a result of setting off loss against chargeable income, this will be saved, this will be saved, and from 3,719 we have to pay tax only 3,334. So this is about using the loss to be set off against total income. Now if we are using the option of terminal loss, remember that we can set off our terminal loss in the previous 3 years income, trading income. So first we have to calculate the terminal loss. So date of ceasing of business is mentioned as 31st May 2022. So we have to calculate the loss for the period 6th April 22 to 31st May 22. So if we consider the question, we have been given the loss of 11,000 for the year ended 31st May 2022. Before that, our year ends on 31st December 21. So it is a period of 5 months in which we have sustained a loss of 11,000. It is the period of 5 months in which we have to sustain the loss of this 11,000. Here in case of terminal loss, first we have to consider the 6th April date before cessation to the date of cessation. So this is 6th April 22 to 31st May 22. If the total loss in 5 months period is 11,000, what is the loss to be recorded for 2 months? So this is 4,400, right? This is 4,400. Terminal loss is 4,400. Then we have to consider 1 year before the date of cessation. This is 1st June 21 to 31st May 22. This period we have to know. This period we have to consider last 3 months. We already have considered. So it is 5th April 22 up till this date we have to consider what is the amount of profit or loss to be recognized in this period. So in this period from 31st December 22 to 5th April 22 we have sustained a loss of 6600 because this is a period of final 5 months in which we have sustained a loss of 11,000. 2 months loss has been recognized above and 3 months loss is to be recognized 6600. In the previous tax year, the total profit is 9,835. I think so it is the profit in the previous tax year, right? This is 9,835. So we have to consider if 9,835 is the profit for the whole year, we have to consider the profit from 1st June 21 to 31st December 22. So it will be 7 months profit. 9835 divided by 12 multiplied by 7, this is 5737. 5737. So now 5737 is profit and 6600 is loss. So it will net off, and the loss to be recognized is the difference of these two figures minus 6600. This is 863 approximately. 863 of loss. Plus we have overlap of profit that we have considered in the first year, that is 6,750. This is 6,750. So it is 4,400 plus 863 plus 6,750. Terminal loss is 12,013. 12,013. This is the total loss, terminal loss. Now we have to recognize this 22, 23, 21, 22, 20, 21, 19, 20. So this is the period of loss, right? 22, 23 is a period of loss, and we can carry back into previous 36 months. So first it is 9,835 income, trading income of previous year, against which we have to set off the loss. Then set off loss 9,835 and it will become 0. Remaining income, saving income is given as 3,250. So saving income 3250 makes total income as 3,250. This is total income, but after deducting the personal allowance, it will reduce to 0. 12,570, it will reduce to 0. Now we have total terminal loss is 12,013. Out of this, 9,835 of loss has been set off. Total loss is 12,013. Out of this, 9,835 of loss has been set off. Remaining 2,178 loss would be set off against the total trading income of previous year. Remember that in case of terminal loss, we can carry back for 36 months. So remaining 2,178 of loss would be set off against previous year, and this will make the income 14,722. By adding 3,250 of interest income, it will become 17,972. So after deducting 12,570 of personal allowance, the income would be 5,402, on which we have to pay tax. And in the previous year, there is no need to set off loss because whole of the terminal loss has been set off.